With the AFG Balloon Lending program, you'll be able to offer options that provide tremendous value to your borrowers while solving their greatest problem, finding a monthly payment that fits their budget. Let's see how it works. Here's the situation. Vehicle prices are rising as new auto models evolve faster than ever. We know borrowers ultimately make purchase decisions based on the monthly payment that results from the financing options available to them. Their main concern is fitting the payment into their budget. Two common ways to finance a vehicle are conventional loans or traditional balloon loans. With conventional loans, many borrowers have to keep extending terms to lower the monthly payment enough to meet their budget. They end up tied to a loan for years, even longer than they want the car, leaving them very little flexibility. Or they rely on the vehicle's value to pay back the loan balance at some point before the end of the loan term so they can trade into a new vehicle sooner. That means they need to pay close attention to the time it takes to pay down the loan enough so that the vehicle will be worth more than what they owe. This is also known as being in a positive equity position. Traditional balloon financing, which is a type of residual-based financing, is an alternative option to manage the low monthly payment requirement that your borrowers want. With a balloon loan, a portion of the loan is deferred to the end of the loan and is due at the end of the term as a lump sum. The main benefit is that this structure reduces the monthly payment. Let's say your borrower chooses a balloon loan with a 3-year termination point, and let's say the vehicle is worth more at that 3-year point than what they owe on the loan. What does your borrower do with that? They can take it to a dealership and trade it in and benefit from the positive equity they have. But what if it's worth less than $16,500 at the termination point? Let's say the vehicle is only worth $14,000. Then what? Then they'd have to eat a loss of $2,500. Not too good. It solves the low monthly payment problem, but also creates a lot of uncertainty. They'd wish they could just walk away from it. Well, now they can. The AFG Balloon Lending program creates a win-win for the borrower by guaranteeing the future value of the vehicle at the time of financing. AFG will say your auto will be worth $16,500 in 3 years, a guaranteed future value at the end of the loan. We call it the walk-away option. The borrower wins no matter what. If they are in a positive equity position, they can reap that benefit. If they are in a negative equity position, they can return the vehicle to AFG and walk away and start over with a clean slate, instead of rolling that deficit into a new loan and staying on a negative equity treadmill. Eligible vehicles are new and used vehicles up to 5 years old. Financing terms offered are 24 to 72 months. Residual value is established based on the term of the loan using industry-approved guidelines similar to leasing. Monthly payments are lower than conventional financing. The program essentially lets you pay for only the portion of the car that you will actually use. At AFG, we know that your borrowers will respond to financing options that match their budget, protect them from vehicle depreciation, and help them avoid the negative equity treadmill. That's why we created the AFG Balloon Lending program. You can count on AFG to always provide the best financing options in the industry to keep your borrowers satisfied and loyal.